Welcome back to The Money in My Mind. I am delighted to reintroduce David, a seasoned macro analyst with an impressive 5 decades of experience. Throughout his career, David has collaborated with prominent financial institutions, consistently demonstrating remarkable accuracy in his analyses. Today, we delve into various sectors, including gold and silver, real estate, and more with specific targets in mind. Welcome, David. Let us navigate the current market landscape. I'd like to explore the melt-up phase. Considering our trajectory since the market bottom in October 2022 and the recent consolidation at the start of this year, where do we currently stand in the melt-up phase?
Yes, definitely. Just to clarify, I believe a new bull leg. We had a bear market in 2022, but in October of 22, with the S&P at 3,500 ish, we began a new bull leg, and the melt up portion of that bull leg, I believe, began in October of 23 or early November, late October, early November 23, when the market pulled back from 4,600 to 4,100, or just under 4,100, and then turned sharply upward. If you remember early November, you had some very big days, and that thrust told me we were off to the races, that the melt-up had begun. And so I think we've been in the melt-up since then. So, and we've had, obviously we entered this year after 2 strong months, with about 3 weeks of consolidation, high-level consolidation. The S&P didn't correct much more than a little over 1%, and NASDAQ a little over 2%, I think. S&P is at all-time highs now to join the Dow that had already gotten there. NASDAQ will be at all-time highs, I think, in coming weeks. What that means is if the melt-up started, 2.5 months ago, then it's just going to steepen as we move along. Doesn't mean you won't have down days or even down weeks. I just don't think you're going to have long, extended pullbacks, and I doubt that you're going to see pullbacks that are, bigger than 2, 3, 4%. Can they be bigger than that? They could, but as you steepen, you just have less room. With any pullbacks, I think will be short and sharp.
Over the past few months, your targets have remained relatively consistent. Could you share any recent adjustments you've made to your melt-up targets for various indices?
In my first quarter letter a couple weeks ago, I did raise my target for the NASDAQ from 20,000 to 23,000, for the Dow from 48,000 to 55,000. For the Russell 2000, I increased that from 3,000 to 3,300. And S&P, I had a target of 6,000 to 7,000. I didn't really raise it, but I did drop off the lower end of that range, and my target now is 7,000. So, again, my convictions are high that this melt-up has legs. I think finance will be a leader in this rally. So, the financial sector had lagged for much of the first part of this rally, last year plus. But I think it's going to have to catch up.
David, could you provide insights into the recent market consolidation and the subdued enthusiasm observed in the gold and silver sector? Additionally, I'm interested in hearing about your current target prices for these precious metals.
Sure. My targets have not changed. I'm still looking for 3,000 for gold pre-bust. So sometime this year, and probably, first 2/3 of the year, I would guess, maybe sooner. And also 60 for silver. Again, if we saw that this year, that's a huge run, but I do still have the same convictions in terms of gold and silver. My call's been very premature, as people on Twitter remind me all the time. It's been a frustrating area, particularly silver. Markets move when they're ready, not when we're ready, and sometimes that is a big divergence between what we expect and when the market's ready. So I do think we're very close to a major turn there, and I do expect a pretty strong first half in gold and silver. and probably spill over into the summer. So yeah, I like gold and silver a lot. And the miners will be another area that should perform very well during the melt up. And the reason I think that it's lagged to a great extent is because the dollar is held up. The dollar had a big decline from 115 down below 100, but then it spent the last many months consolidating that decline. So I think we'll probably see it fall from the 103.4 area that it's in down towards 90, and then ultimately down towards 80. So I think there is, again, lower interest rates, lower dollar, and sharply lower in both cases are going to be catalysts for the gold, silver, and miners.
It appears that bonds could experience a substantial rally even during the melt-up phase, preceding the anticipated market downturn. Now, considering real estate, does it also factor into the melt-up dynamics? Or do you maintain the view that real estate might face challenges during the subsequent bust?
Yeah, it's because I am bullish on bonds and do think that we could see a 2.5% 10-year during the melt up, meaning between now and let's say summer sometime. If we get that, you could see a sub 5% mortgage, or certainly a 5% mortgage rate again. You get it down there, 4.5%, 5%. You're going to have some of that pent up demand that missed. So we can't afford that house we were looking at now because rates went up, mortgage rates went up to almost 8%. So I think you'll see a bounce probably late winter into the spring because rates are down. I would just caution though that you're at the end. I think we saw a peak in housing maybe a year ago or somewhere around there. And any bounces here are in the context of a rolling top. Ultimately, I think in the bust you could see housing get hit pretty hard.
Okay, as we transition toward the anticipated bust phase, what factors would prompt you to adopt a bearish stance at the peak of the melt-up? Is it influenced by investor sentiment, where widespread bullishness might signal the onset of a new secular bull market? Could language and prevailing narratives play a role in this assessment?
Yeah, I'm a contrarian. I'm the contrarian out there probably. So sentiment always is important to me, and at tops and bottoms, I'm pretty alone. So yeah, when everybody is telling me there's a long bull leg ahead, or that there's clear as the eye can see, or gee, there's nothing here to be bearish about. They're giving me the bullish story that I've had for a while. When everybody's all in, I'm going to be out. I'm going to be starting to get very nervous. And I just caution people, it's not a simple thing to go against the crowd. And of course, they're not going to be all in because everything's getting bad. They're going to be all in because there is a narrative there that they can buy into that looks pretty bullish. So it's not going to be as easy as you think to say, well, when everybody's all bullish, I'm going to be bearish. It'll be hard to fight, just like it was hard to fight at the bottom. There are lots of people that would have loved to have been bullish at the bottom, but they were scared to death it was going a lot lower. So not just market momentum, but some of the data and information that surrounds the top will make it hard to be bearish. But I suspect sentiment will play a big role for me.
Given the substantial downturn we've discussed, with the potential 80% decline in indices like the S&P, you previously highlighted that assets such as treasuries and the dollar could retain value. Could you confirm if this assessment remains consistent with your current outlook?
Yes, I think the dollar will get a bid as a flight to safety trade. So we've seen in history, and I don't think it's changed, even though everybody's thinking the dollar's losing its luster. But I think in times of crisis, world crisis, we saw it certainly in March 2020. If my forecast is right, we're going to have the biggest financial calamity maybe in history, but certainly in the post-World War II era, so worse than 2008-9. It only stands to reason that people around the world are going to be looking for where can we flee for safety. And I think the dollar still becomes the one liquid asset that they will run to. So I think the dollar, as much as I'm bearish on the dollar this year, I think during the bust you could see it completely do a reversal, a 180, and go back beyond the 115 high we saw a couple of years ago. I'm saying 120 plus. So whether it's 122 or 140, I don't know, but it's probably, I mean, that if it goes from 80 to 120, that's a 50% run, and will happen probably pretty fast during the bust. Could carry a little beyond the bust, but that's kind of the magnitude of what I see coming in the dollar and treasuries. Again, the U.S., as much as our debt is building up too fast, way too fast, and we have big deficits, and financially, I think we're heading for a disaster. In spite of all that, the world still sees us, and correctly so, still sees our government as probably the stablest government in the world, or the one that you can most trust in terms of the backing. So the government guaranteed U.S. Treasury, government guaranteed securities where you can get your money back, will be getting a bid during a bust as well. So, and at the same time, I mean, I'm expecting inflation to go to deflation in the bust. So you've got that going for you for bonds and government guaranteed bonds. And, the Fed's going to have to print money like it's never been printed before, to the tune, my estimate is to the tune of $20 trillion. And to put it in context, we had $5 trillion expansion back in 2020 and 21. So this is 4 times that. To do QE to that magnitude, QE means you've got to buy bonds. But ultimately, you're going to be monetizing the U.S. debt. If you're monetizing, if the Fed is buying all that debt, you've got a huge bid for the debt. That means rates go down. And at the same time, you're going to, the Fed's buying them. So are institutions, so are individuals saying, I want the safety of the U.S. Treasury. So lower rates, deflation, and the Fed all going in the same direction will push. I think you'll see a 0% 10-year during the bust, and as I've said, I wouldn't be shocked if it goes to negative territory. I think short rates definitely, shorter paper will go to negative territory, and the 30-year probably goes to a quarter or a half, something down there.
In light of the potential market downturn you've described, what steps or strategies would you recommend for individuals to prepare themselves financially and safeguard their assets in such an event?
Yeah, I'm a macro strategist and have to walk a very fine line, make sure I don't put advice out there. Even, I certainly don't make recommendations and can't give personal advice. But what I can say philosophically is, well, the reason I'm a 50-year contrarian is because I noticed very early on, and it was reinforced every cycle, is that people tend to get most bullish near tops and most bearish near bottoms. And you're going to see, we got very bearish 2 years ago, or even a year and a few months ago, and we've been kind of gravitating a little bit in the direction of more bullish. We're now, with the market going to new highs, we're now going to see that bullishness continue to build here right into a top. And I just caution people, remember that things can look brightest, or all the stuff you'll see on in the media, CNBC and Bloomberg and elsewhere, is going to be much more bullish as we move closer to the top, as this thing continues to show momentum to the upside. So you have to, as an individual, guard against getting caught in that, and at some point maybe go the other way. I can't give any advice in terms of how people structure their portfolios, or whether whether they go to cash or whether they buy bonds or what, that they'll have to talk to their advisors or figure it out for themselves. What I can just say is that that's how sentiment works, is that, when things look the best, it might be time to really start questioning, what am I paying for that? When they're most bullish, they've already acted on that. They're not telling you what they're going to do. They've done it, generally. And when they're most bearish, they've already acted on that bearishness. So what's going to follow that? So when you're at the top, just remember, in the aggregate, most investors are already in. They're already acting on that bullishness. So it's what's going to come after that is what you have to ask.
구독과 좋아요, 그리고 알림 설정은 저에게 많은 도움이 됩니다.